Tough trading weeks like this will teach us it's not always about having a high win percent rate. Because we pay the piper in dollars, not percents, it'll teach us how to keep our losses under control and not to let them run too much. So let's see what happened to the market and to our portfolio on Friday after the bell. Greetings, and salutations to all my brothers and sisters of the trading world out there. And I tell you what, for me, it's been a tough trading week. It has been a hard week to trade. It's like they've gone up and they've gone down. And today, on Friday, my gosh, we had these huge spikes going on and then boom, instantly retrace it. And if you're sitting there and if you're a swing trader or if you are a day trader, you have my deepest sympathies because there was tons of times I'm sure that you got struck out. And if not, you probably made a bunch of money. But for us options trader, it made for a rough week. And if you had options coming due, it was sweating it right up until the end. I'm quite sure. I know for myself, my puts have been taking a beating. I've got puts that I've had to roll. I've had to roll several of my Rigetti puts and other things. So it's been a tough trading week. I mean, with these ups and downs and swings, and then sometimes these swing all over the place and don't go anywhere. It's tough to pick a position. It's tough to pick a trade. It's tough to pick a stock that you have the faith in to be kind of a little bit stable and kind of do what you want over the course of time. But I tell you what, hang in there. It's all right. It's tough. We're going into earnings season, and that's always a very brutal season, in my opinion. I hear people all the time talk about how they love to trade earnings. They love trading earnings. You have got to be out of your mind. It is a 50-50 shot at best, and I'd put it more about 60-40 because it doesn't matter what the place does. It doesn't matter what the report is. The stock can do anything. I mean, they can smash it, as we know, and absolutely stock plummet. We can see a mediocre report and the stock go through the roof. So let's just not kid ourselves. Be very careful in this time. With this kind of market going into earnings, it's a tough play. So just a word of caution, make sure that you're putting on the trade that you want to put on because risk management at the beginning, as we know, that's the time to do it. But hey, you know what? The SPYs are up about 1%. And that's being a little bit generous in the QQQ, all the NASDAQ and all them. They're going to be about even for the week. And that's because they've been all over the place. I mean, some sectors are running hot, some are doing cold. I mean, AMD lost money, NVIDIA caught fire a little bit. It's just been all over the place. And don't even get me talking about the rest of it. I mean, Meta and Microsoft, my God. But IWM, the little guys, let's talk about them for just a moment. IWM, the Russell Index, the RUT, whatever you prefer, they have been doing great, right even underneath my nose. I mean, week after week, we've been saying, hey, score one for the little guys, score one for the little guys. And all of a sudden, they're up more than all the other indexes. They're up more than the SPY index. They're more than the S&P 500, all that. They're up more than even the tech sector. So let's pay attention to these little guys maybe a little bit more. We dabble in the little guys just simply because we're smaller traders. We're not multi-million-dollar accounts. We're not slinging all these huge trades and everything. We're just the little fish in the place. So we just get in there. So we like those little stocks. So if we can get some small caps that we really like, hey, fantastic. So maybe we'll start looking a little bit into that. We've really been focused in on that, data AI center build out. Absolutely, that's in focus. Energy, all of that, that's not going anywhere. Drones are still at the front of the forefront here in my mind. But also we want to, just think about that IWM for a minute, and we'll see where it goes. Up being 20% up right now is a little bit of a dangerous territory. I'm not afraid of all-time highs, but on ETFs that just keep running, you just kind of got to watch it. But we'll just keep an ear to the ground and see what happens, And as I said, we were heading into these earnings season, and earnings season is going to be tough. It's always led out by the banks. You have a few airlines thrown in there as well. But one bank that I want to pay attention to this time is J.P. Morgan. Jamie Dimon is stepping down to J.P. Morgan. If you don't know who he is, he's a fantastic, he's been there forever. He's a brilliant guy. Love him, hate him, whatever, it doesn't matter. But he's not stepping down, on bad terms. He's already got his two successors to come in and replace him and everything. And I think that he's going to come out and he's going to, kind of lead the way for them to be nice and soft. So I think J.P. Morgan is going to have a pullback where, he's not really going to give them both barrels. He's going to go ahead and give a soft report on J.P. Morgan, maybe a soft outlook for the next time to give these guys a nice runway. So there's a chance that JP Morgan may have a slight pullback. That is complete speculation. And as I said, I am not, first of all, I'm not a financial advisor. And second of all, I am absolutely not an options, earnings, trading financial advisor at all, because I don't like to get in there. But that's when it kind of struck me as curious. It did have a little bit of a storyline to where it could have a little bit of a pullback. But make no mistake, we don't play JP Morgan short for the long term. That's a solid, they're like Goldman Sachs, man. I mean, they're just making money. They've got the best deals. They've got the best people. So we don't even play around with that. Even if they're pulling back, we don't play them short. But as we look around, some of our favorite stocks are really down, the ones that we talk about. But you know what? I think that's a great time. Yes, it stinks if you got positions on it or coming due. But if you don't, if you love the stock at X amount of dollars, you should really love it down here at Y. You should love these sales that are going on. And some of the stocks that I love right now that we've been talking about, Rigetti. I still love Rigetti. I loved it when it was just over $20, and I'm certainly going to love it at 17. I like RCAT. I like UMAC. I like both of those in the drone sector world. RCAT's now under $20. UMAC's pulled back or RCAT's under 10. UMAC under 20 now. So those are great prices for them, and they really have some nice, sweet options premium going on inside of them. And we just did a video about rare earth. I like USAR. It's under that $20 range, and it too, man, has some great premium for its options. You can get down there around 16 bucks on your naked put or your put ranges. So you can get down around $16, and it's yielding over a dollar. So right there, boom, that's going to help your costs. Even if you get put the stock, you're already over a dollar down. So you're looking at somewhere in the 14 something range, or you could even get a little bit lower. It depends on how, that over a dollar at 16 was a 30 delta put. So if you put in you're a 20 or 15, 18 delta put, you may be getting there a little bit cheaper, get it just around that $90 premium, and have a pretty daggone safe play, because it's been a long time since USAR has dropped below 16. And they're also in that government portfolio. They've got a lot of great contracts. They're doing it right, but they're just not in play right now. They're just not in focus. But when they do come in focus, they're going to go up. They're going to rise. Now, this isn't going to be a meteoric stock. They're just going to go up. They could double on a great outcome, but you're looking at somewhere around that $30, $35 range for its highs, and then we'll see where it goes from there. Let it recapture its old highs, let it ride it up till then, and we'll play puts along the way. If you want to buy some of the stock right now, absolutely nothing wrong with that. I'd probably do a little mixed match of the both, so that way you can even keep lowering your cost, and you make sure and don't miss out on a play. But make sure that you understand that this stock's not going to go from 18 to 28 in a week. So you may get a few dollar rise, but you'll get a chance to get back on a train. You might miss a couple dollars, but that's perfectly fine. There's plenty of money to go around. Looking out also, SpaceX. SpaceX has been a crazy stock. If you are a day trader or if you're a swing trader, that stock's been on fire, man. It's been all over the place. We're still getting in SpaceX. Nothing wrong with SpaceX. I know it's clear down here at this 150, and actually I love it because I've been able to get in at slightly little bit less than 150, 148, 147.50, 149, and I just keep dollar cost averaging in a couple shares here, a few shares over here, and sooner or later, those accumulate, and you're going to have a great cost average. I don't care if it slips to 135, what its IPO cost was. Everybody's trying to curse it. I could care less. That stock's not going anywhere, and it's not going down. The company's not going bankrupt. That stock's just going to get better and better. Just the same way as they scoffed at Tesla, that stock, SpaceX, is going to keep getting better, so I have no qualms in this long-term play, a very rare long-term play for SpaceX. And even beyond that, one of my personal near and dear stocks for absolutely zero reason, but it is a solid company, is Oklo. Oklo is down there in that $50 range. I've already been, pouring into Oklo. Pouring is a bold term, but I've been buying shares of Oklo. I've been buying puts into Oklo. So, I've been entering in. It's even been hitting down there 46, 48, 47. So depending on where you catch it, you're talking about some great deals. So right there are 6 great deals, I think, that are going on. We were looking at super small stocks, the Serve, the Sound, the Joby, and the Archer. All of those are junk. They're absolutely not going anywhere. So we're going to get out of what we got going on, the plays that we have going on, and we're just going to leave them alone for a while. Worth noting, though, Joby does have negotiations and contracts going on that is very unique to start working with medical facilities, huge hospitals, for running organ transplants, for transporting organs from place to place in their they're copters, I guess. So that's a great angle because that's not been done yet. So far, they just been jet setting around the uber rich and famous from Dubai to here and there, and from Manhattan to here and there. But now, if they get over in that medical, and plus they are the only ones I think that has the contracts and that are in that space. I don't think Archer or any of them. So Joby would be my top pick to keep an eye on if you still really like that, and I do. I'm going to keep a hold of a couple hundred shares of Joby just for fun, just to have it around. The other three can go away, and once they get a couple more bucks back under them, then we'll jump back in and start playing them again. They're just a little bit too low and too cheap right now, so I'm going to get out of what we got going on and just move on, and that's okay. And one thing, the Mag 7. The Mag 7 has just been an absolute dog this whole year. The Mag 7 stocks, I mean, it's not that they've been going down and crashing. Well, Meta's been an absolute disaster, and Microsoft's been a disaster, and Google and Amazon just kind of been flooded around, and Nvidia gets a little bit of Tesla. But once those Mag 7 stocks catch back up, once they catch back on, everybody starts loving them again, and they will, then the market, I think, is really going to run. I don't know when that is. I mean, Meta's so far out of favor with all its lawsuits and trying to ban it for people, under 18, under 16, minors of different age levels in different countries. They've got a mess going on, and Microsoft just doesn't seem to have anything going on. So really, there's plenty of places to play outside of the Mag 7. If you like to get in there and play them as a dog play, absolutely. If you like to get in there and get a great bargain, and you believe Meta's going back up, up and up, well, then it is dirt cheap right now. But that is enter at your own risk, as they say. But hey, you know what? It's all right to have down weeks. We need a bargain. We need to go and get a sale. I like it when my favorite stock's on sale. It's a good time to buy. It's a good time to get in at your puts, and that's when you really want to get in at your puts, is when it's at its base, when it's starting to make a bottom, when it's starting to kiss off that 200 or the 100 or whatever you may use or you may look at to know. Then by all means, get right back in there. That's why you keep the dry powder. That's why you keep it on. Yes, our stock's taking a beating. Yeah, and oh my gosh, Rocket Labs. I loved Rocket Labs. Yeah, I don't know what happened. What's going on with Rocket Labs? Nothing's wrong with the company, but all these space stocks are just kind of going out of favor. And even though Rocket Lab is got a golden runway ahead, it's been having the absolute what kicked out of it for a couple of weeks. So it's cleared down around 80. So I'm out of my puts. I'm out of everything. Rocket Labs has got some kind of weird thing going on. I'll give it a second. It'll catch right back up. No worries. But hey, whatever stock you got going on, if you think you're in trouble, just defend it. Get in there and roll your positions if you have to. And in markets like this, sometimes we just need to change up our strategy. Maybe, we need to do calendar spreads or poor man covered calls as opposed to what we've been doing. Maybe, jade lizards aren't working. Maybe strangles aren't the answer anymore. Maybe, put credit spreads and, it's some kind of, defined risk trades are the answer right now, because you don't want to get whipsawed all over the place. You want to know what you're going to get as soon as you get in, and the danger and the risk and all that. But hey, you know what? It's a rough market to trade this week. Next week will be a better market to trade. And if not, we'll just adjust and do whatever we have to do. And you know what? There's nothing wrong with sitting on your hands. That's a good strategy to employ as well. Hey, keep all your trades good. Keep your chin up. It'll be a better week. And hey, if you had a great week, I salute you. Absolutely. Good job. For us, the rest of us, it's a little bit time for a bourbon. So have a great week. Thanks for tuning in. Like and subscribe, and we'll see you next time here on Trading in Your Future.